April has been an ugly month for stocks. I'm Lisa Bernhard with Reuters, and here to talk about just how ugly it's been is Melissa Brown. She is Managing Director of Applied Research at SimCorp. Melissa, I know we had a couple of up days this week, but give us some perspective on how tough it's been for stocks in April so far.
Yeah, I think that there's so many statistics you can look at. I mean, the market is down more than 5%, at least through last Friday. So that's, one basic number you could look at. It was down, I think, 11 of the 15 days of the month, which is a much higher proportion of down days than we usually see. Um, the market has been fairly narrow, which means that most stocks are underperforming the market. So the market is down and most stocks are down even more. So there are a lot of different ways you can look at this, but it's very hard to come up with a conclusion other than that it's been a tough month so far.
So would you say that the losses came primarily from reevaluating when the Fed might cut rates, geopolitical tensions, and now that we are in earnings season, do you expect for earnings to send stocks back up again? Are you optimistic?
Um, well, I think investors are going to be very focused on earnings probably for the next 2 weeks, and maybe stepping back a little bit from what's the Fed going to do, will they or won't they? But I think once we get through, we have, some clarity on earnings, what the full quarter is going to end up looking like. I think the market is going to turn back to what the Fed might do, um, what some of what's happening in the geopolitical world, with the two wars going on and so on. And then I think, as we move out maybe a couple of months, the election is going to really start to weigh heavily on investor expectations.
How would you categorize that the election will weigh heavily on investors?
Well, I think the thing about the election is that the two candidates have such different policies from each other. And so, with one candidate, you're going to get certain sectors or certain parts of the world that are going to do better. And it will be the flip side with the other candidate. So, not that either one is necessarily the better, has the better views on the economy, but they are very different. And because of that, it's very difficult to know what do I want. The race is very close. And it's going to be very difficult for investors to know what they want to buy or sell.
The consumer, as we know, powers this economy and has continued to do so surprisingly. What in your research has shown you about consumer spending, the power of the consumer going forward, and this pretty remarkable resilience?
The resilience has been remarkable, surprising, not necessarily also aligned with kind of what you hear in the media that people are saying. Inflation is really hurting them. But some subset of consumers are continuing to spend, and kind of propelling the economy despite the relatively high level of interest rates. And I think that, just to kind of circle back to your last question, I think that is weighing heavily on Fed policy. They have raised rates many times, and then they leveled off at a fairly high level, a high level of rates compared with what we've had for the past 20 years or so. And yet the consumer is continuing to spend, and inflation is continuing to come in a little bit hotter than expected. And so I think that makes, the policy decisions even more difficult. Then, of course, you add on to that, does the Fed, can they really do anything? Or are they going to, whatever they do, is it going to be viewed as a political move, rather than a purely data-driven move?
So I'm going to put you in the hot seat here because you do parse the data. If you are a member of the FOMC, what would you advise doing in terms of interest rates?
Oh, that is really a tough one. I would probably say not to do anything right now. Let's avoid this political discourse, which can be very damaging, and give the higher level of rates a little more time to work their way through the economy, to hopefully eventually get inflation down to that 2% number. I suppose that would probably be my inclination. Inflation is not so high that maybe the Fed needs to reverse course and raise rates, but it's high enough that a rate cut may not really be warranted at this time. So I guess my inclination would be to just stay the course for now.